How's it going, everybody? It's Papa Wall Street here, Diddy Naz, with my office hours. I run this every 2 weeks. Today is August 3rd, and the market is melting up. So before we get into the charts and what we're going to go over, just really quick, I do run an educational platform, giving out daily trade setups, emailed every morning, 20 hours of video content for education, my long-term top 10 conviction list, trend spider scans and watch list, trading rules and documents, unlimited chart requests, and of course these office hours, as well as a weekend video that comes out every Sunday at 6 p.m. So that was the quarterly plan. The annual plan is basically everything, but including coaching. So I do a lot of one-on-one coaching throughout the week. Usually have 3 or 4 students that I'm working with at any given time. And these are really for anybody who's either just starting out, or if you're looking to, just get better as a trader. I know for me earlier on in my career, when I wanted to go full-time trading, I worked with a couple of mentors and coaches, and it really, really helped me get to that next level. And so that's it. Yeah. So the educational platform is either $129 a quarter or $479 for the year. And then the executive plan is $699 for the year. I also have a couple of lifetime subscriptions. I open this up every once in a while. So I think I have a couple of those that I'm putting up. And once they go, they go. So there's limited seats on that. So bear with me while I get these charts up, because we have a lot of really interesting charts to go over today. So bear with me while I get that screen up. Okay, let me go full screen here. I have my Siri trying to talk to me here. All right, so here we go. So before we get started, I'm always doing my charting on TrendSpider, and something for those of you who have continued to watch my videos, I do appreciate your support, but you might notice something different. I am going with a dark screen mode. So short story long, or long story short, I used to chart exclusively off of a dark theme when I started, and then for some reason I switched to a light colored mode, and I've heard some grumblings that the charts are a little difficult to read, and so I was like, you know what, let me go back to my dark mode. So dark mode is now activated. I think I'm going to stay this way, although it used to be black. In fairness, it used to be black and now it's gray. So all right, anyway, getting sidetracked here. SPY melting up. Welcome back to the dark side. Thanks, Josh. Yeah, melting up is an understatement. Let me grab my little tool here so we can see the chart real quick. But we put in this low. If you remember, I had this target zone back in, I think I started it in April, somewhere around here, April, May, and I had my target zone to the downside. It was really just quite simply a Fibonacci extension to the downside. And we bounced right in between that zone. So that was a really nice hit right there. And I didn't know if that was going to be the bottom, but it seemed like it was a bottom. And so since then, we've put in what looks to be a 3-wave move up, right? So here's your wave 1, here's your ABC correction in wave 2, and here's your wave 3. So this is looking pretty good for a continued melt up. Now you see, I anchored my volume by price tool to the all-time high. So basically what this is doing, what this volume profile on the right is telling us, is where is all the volume to the right of that candle. And so this is important because now you can see we're going to start coming up to this supply zone up here. And it's no coincidence that that's also where this yellow line is. That's your year-to-date anchored VWAP. And this is your 200 simple moving average, right? So we broke over the blue line. That's your 50 simple moving average. We back tested it, we bounced, and now it looks like the magnet, the 200 simple moving average has activated as a magnet, and it's pulling price up, and price is melting up. And a lot of this could be also shorts getting liquidated, right? We're getting a bit of a short squeeze because all the bears that thought we were going down, we're going up. And so they're going to have to liquidate their positions. So the other thing you have to note, we had a multi-week squeeze set up. So from July 11th to July 27th, we had a squeeze setting up with rising momentum. And that squeeze fired off on, let's see, July 28th. So looks like last week. And we're getting that continuation follow through. So the way I use the squeeze, it's not always about getting in when the squeeze fires. You have to at times anticipate before it fires. And so you have to look, are your moving averages stacked? Look at lower time frames. Do you have lower time frame bullish squeezes setting up? When you have them with confluent on multiple time frames, it generally makes for a big squeeze firing on the higher time frames, and that's exactly what we've seen. Lower time frame squeezes setting up and firing, triggering the higher time frames. And right now we're 5 days into the squeeze. Generally speaking, 6 to 8 candles. So in this case, 6 to 8 days would be the expected move up. Sometimes you can go higher, and I've seen squeezes that have continued to fire and just stocks just melt up. But what I would be is a little more cautious if we break through 415 as we come into this 421, 430 region. This is where I would start, tapping the brakes a little bit and watching for supply to get absorbed and potentially a rejection off of that level. And if that's the case, then what that would possibly look like is this. And bear with me while I grab my Elliott wave tool. Where are you? Hello. Where did it go? Excuse me, everyone. Just lost my tools here. There you go. Sorry about that. So what that might look like is wave 1, wave 2, wave 3, somewhere in this region here. And then you're going to get your wave 4 pullback. And that wave 4 pullback could come to 415. It could come down to 409. It could come all the way as low as 400. We won't know until that wave 3 top is put in. But once that wave 4 is put in, then we're going to watch for our wave 5. And wave 5, if this is a 5-wave setup, I think that will take us back to all-time highs. So that's what I'm watching for. But of course, you always have to have a plan to the downside. And this may not be, a 5-wave impulse move up. It could just be another leg of a multi-leg correction. And so right now, it looks like we're melting up. That's the way I'm going to play it until the data and the charts tell us differently. So very similar to SPY, we have the Qs. It's telling us fairly the same thing, right? This one looks like a 1-2, 1-2 setup, right? This 1-2 setup nested inside this 1-2 would be your wave 3, right? So that might look like something like this. So if this is your 1-2 and this is your big wave 3 is going to also have 5 subwaves. So 1, 2, 3, 4, 5, right? That's probably your wave 3 right into the supply zone. Either it hits the 200 simple moving average and gets rejected, or it hits the 200, breaks out and then breaks down. Either way, if this is our 3rd wave, we'll get a 4th wave pullback and then a 5th wave higher. And that 5th wave higher could take us right back through that 200. So again, it's not something I want to necessarily anticipate, but it's what I'm seeing the charts telling me. And a lot of the times too, you see here, we broke through that 50 simple moving average and we hit this top here, and then we pulled back, we back tested that 50 simple moving average, and we bounced right off of it. And the other thing that I really like about this is you see this 1-2, it's contained in a parallel line. When you break above that parallel line, this is pretty bullish. This usually signals 3rd wave activity. Something else I would watch for is maybe a big gap up day. So maybe we get that this week. I don't know. But if I did see something like that, that would make me even more bullish on this thesis. So, but for now, we did break through 320 today. We had a really nice bullish push, and tech was looking good. And we'll look at some of the individual charts coming up, but even some growth names are starting to come back to life. So that's looking really good for the overall market. All right, next up is IWM. So small caps tend to be the laggard, generally speaking, when the market is correcting and then bouncing. And so we're also seeing small caps participate, although not as big of a push, right? You could see we're still contained in parallel lines here, although we did break out today. It would be very similar. Look at, we're anchoring back to all-time highs. Look at the supply zone up above. We can melt into that supply zone, but expect the market to get pretty choppy once we hit it. So if you have SPY, the Qs, and IWM all coming up to that 200 simple moving average, all coming up to that supply zone at or around the same time, that's possibly the moment where you, A, don't put any new trades on, B, start tightening up your stop losses, and C, start looking for trades to the downside off of rejections. So, if that's just what I would do, personally, how you trade is how you trade, but these are the things that I'm seeing in terms of the market. The other thing that's really good, we're seeing the VIX fall. This is your volatility index, and I'll zoom out real quick, and you can see this was COVID right here. This was the COVID high, and it's just slowly been declining. But every time we decline, you get a little spike, a spike, all these different spikes. We haven't had a spike since March of this year, and right now we're in a falling wedge. So we're under all of our moving averages, which, it's not really to say much. You don't really trade the VIX like you would trade a normal stock. But from a pattern perspective, this is looking pretty good. As the VIX falls, the market should continue to melt up. Once you start to see the VIX start elevating, that's when you also want to start being a little more on the cautious side. The other thing that I don't really go over here, we can look at, was it the dollar index. So, the dollar has been rising considerably since the war in Ukraine went on, and that's still going on. So let me grab this. And you can see we're fairly contained in parallel lines here. So we're right at the bottom of the move, and we're bouncing off that 50 simple moving average, which you could see back here did act as support. And so what I'm going to watch for here, look at this, we have a daily bullish engulfing candle. So this is telling me, watch for the dollar to start rebounding and either consolidating or rebounding off this level and start to move back higher. However, if we start to break down from this level, that's good for the market. A weak dollar is good for the market. A strong dollar is not good for the market. So it generally will play inversely. And you can see as the stock market has been melting up, the dollar index has been coming down. So something else you could watch in terms of an inverse play on the market. Okay, let's start talking about some indexes, some ETFs. And what I'm going to do is we're going to look at 4 today. And these are going to be the 4 that I'm going to be watching into the rest of this week. And it's only because they've been showing relative strength over the rest of the market and the rest of the sectors in the market. So your first ETF is going to be TAN. This is your solar ETF. It tracks names like ENPH, which we'll take a look at later, Solar Edge, SEDG, Run, and FSLR. And you could see once we broke through that 200 simple moving average on July 27th, the next day we actually gapped up. This was ENPH's earnings. ENPH actually is about, I don't know, I want to say 25, maybe 30% of this ETF. So if this thing is moving, ENPH likely is also moving. And so ever since then, we've been consolidating, which is very normal. What I'm looking at here potentially is going to be wave 1, right? A, B, C correction, wave 2, and potential wave 3, right? And signature of wave 3 is going to be a move over your 1-2 parallel line and also a gap up. And so right now, we're not over this parallel line yet, but we did gap up. And so this is telling me this could be wave 3 activity. In fact, if you see a little minor wave, wave 1, 2, 3, this could be wave 3 of 3. So this could signify a pretty powerful move to come here on solar names. So I would absolutely keep a close eye on some of these names that I mentioned, specifically ENPH, but there might be some laggards in the group that haven't made the big moves that ENPH has. So keep an eye on this sector. Next up is clean energy. So very similar to TAN. Here we grab that. And so this has holdings, also has ENPH, but it'll have other types of clean energy. So plug, NEE, and wind, right? So this one also is moving higher. If we get a trend line going here, you can see that we did gap up very similar to TAN over that trend line. And this is also something that, you know, you should keep an eye on. We had a squeeze fire off 4 days ago, and it has a very similar setup, you know, similar to what I just mentioned on TAN. So bear with me while I get that. I don't know why I keep losing this damn tool. So there's your wave one. Could be an A, B, C here, right? 2, and then again, wave 3 potentially to the upside. So yeah, I would keep a close eye just in general, clean energy, but more specifically solar. All right. Next up are your these are your semiconductors, right? So think about TSM, NVIDIA, Qualcomm, AMD, Micron. Obviously, we had AMD had earnings on, what was that, Tuesday, yesterday, after market. They sold off and then actually had a nice rebound day today. Yeah, I mean, from a chart perspective, this looks really good, right? Again, you broke over that 50 simple moving average. You back tested it here and beautiful bounce over that. And now that daily breakout today. So again, that magnet, that bear with me one second, that supply zone magnet and that 200 simple moving average are just above. So this could trade very easily back up to these highs here at the 200 simple moving average, was right underneath that supply zone. So the only thing I'm watching here, we've had, let's see, 6 green days in a row, and that squeeze that fired, the momentum is starting to wane a little bit. So we could see a couple of more days of upwards movement or maybe some consolidation here. I would also watch for a back test on the breakout of that trend line. Okay, next up is IBUY. Let me get the tickers for that. Second, there we go. So this is Booking Holdings, Expedia, Airbnb, Groupon, TripAdvisor, and Amazon. And you could see we are in a, let me put that back on the screen. There we go. You could see we are in a wedge here, and we are breaking above that wedge today. Squeeze fired off yesterday, so this is possibly just getting going. You can see we broke out of that 50 simple moving average. We back tested but gapped under it. We actually did not back test there. And then those next 2 days, we filled the gap and bounced off that 50. So again, very simple. Watch those back tests to the key moving averages, you know, your 21 EMAs, your 50 EMAs. Here, what I would watch for first, it looks like we've got some fib work here. So watch these Fibonacci levels, but the first big level I'm going to really watch is 59.16. That's your 618 Fibonacci retracement from this prior swing high to this swing low right here. That's also probably going to align with our year-to-date anchored VWAP. That's that yellow line. You could see all that resistance right here and right here. So the next time we come into it, I would expect a little bit of a bounce and chop around it. But I think this time, you know, we possibly could see a breakout above it. So we'll have to wait and see when we get there, but IBUY looks pretty good. So those are the 4 sectors I'm watching: TAN, iClean or ICLN, SMH, and IBUY. So we're going to go into some individual names now. I've got, I would say probably about 20 to 25 names that look pretty interesting. What I would say is if you have any chart requests or any comments, drop them in the chat below now, and I will get to those once we get through the chart section of this office hours. So some of these are going to be trade ideas that are already put out. Those will be the green boxes that you see here. Generally, is where I put my trade idea. You'll have the date the alert went out, and what I was looking at. This one was a 200 SMA breakout. You can see that we got that breakout yesterday. I generally like to wait for a daily close over the level before entering the trade. However, me personally, I will take the trade on a lower time frame breakout, but I will only hold that trade until unless we get that close over. So for instance, if, let's say we got the breakout on 1372, I took the trade, but by the time the market closed, this was closing underneath my trigger, I would stop out of the trade. Whether it's a break even or at a small loss, I'm fine with that, because generally false breakouts will see a reversal before you get a retest. And if you don't want to be holding, bags or holding, trades in the red, then your best bet is to just be disciplined with your trade approach, right? And for me, I'm only going to be holding that trade unless we get that daily close. All right, so AEHR, this is in the chip sector. I believe they clean chips, I think. And you could see we've actually, for those of you who've been with me for a couple of years, we traded this move up, I think from early 21 into 2022. I mean, it was a huge, huge move. And you could see even from a wave perspective, it looks like potentially wave 1, 2, 3, triangle 4, and then you had an extended wave 5, and then you had an ABC correction, and then it just continued down. So this looks like almost like let's see. Yeah, this is like almost like a WXY, right? This being your last leg here. And so it's looking pretty good. It's setting up to potentially do a new move, a new impulse move to the upside. So what I'm seeing here is a potential 1-2 setup, right? Similar to what we were looking at on some of those indices. We would watch for breaks over that channel, but you can see here, we're coming into the center of that channel right there. And that's also right at a 382 retracement. So that was my entry today, 1372. We closed at 1413. So we're allowed to take this trade. And now what I would be watching, my first two targets, 1587 and 1802 to the upside. Now that's going to be your 618 retrace from this swing high here to this swing low there. And so if we break through 1802, then I think $20 and then potentially up to 24. But once we hit that 618, I'm going to get a lot more cautious with the trade and make sure I'm moving my stop losses up. Next up is Aflac. Talked about this one late last week or into early this week. And you could see we broke through that 50 simple moving average. We back tested it on Monday. Tuesday, we gapped up on earnings. You can see the earnings right there. And now today we put an inside day in. So the way I treat earnings is very simple. I'm going to drop an anchored VWAP right on that earnings candle, and I'm going to track this for a few days. But you could see we're hovering right underneath that 200 simple moving average. And that is definitely something I'm going to be watching, because right above is the year-to-date anchored VWAP. You could see once we gap below it, that acted as resistance here, and it acted as support there. So what I would watch for, a break and hold over the 200, you could enter certainly right there, and then just watch that year-to-date anchor VWAP. If we get a close over that, we'll test 61.51, and then over 61.51, we'll probably make a move back up to these highs here at 67.20. All right, next up is Affirm. Remember I mentioned earlier in the video that some growth names are starting to perk up a bit. Not saying I love this company, but you have to be objective when you're looking at a chart. And we have a series of, well, not a series, but we have a single series of a higher high, right, and a higher low here. And so what I'm watching for is a break over the year-to-date anchor VWAP. Now, this is a pretty good close right here, because we did break above 3071. You just have to watch 3731. This is going to be your 618 retrace from this prior swing high, swing low, and that year-to-date anchor VWAP. But this is a pretty good entry here, targeting the 618, and then potentially back up to 48.46, and then you'll have this declining 200 simple moving average. But keep in mind, we do have earnings on August 25th. Next up is ANET. This one had a false breakout yesterday over the 200 simple moving average. We back tested and bounced off that 200 today. You zoom out, looks like to me an ABC retracement with a 1-2 potential wave 3, right? So what are we looking for in wave 3? You got that 1-2, 1-2 setup. Here's your 1, 2, 3. What do we see? We see a gap up. We see a break over the 1-2 channel. So this is very textbook wave 3 activity. So what I'm going to be watching here, a move up to 131. We're going to potentially hit that supply zone and get rejected. I would watch for some sort of triangle formation back into the 1-2 channel top. And then it bounces off that, we should start to see our wave 5 activity. And wave 5, I would say, could take us back up to these prior wave B highs at 143.53. Next up is ARIS. And let me zoom this out, make this a little smaller so you can see it. So this trade alert went out on 8/1 for a daily close over 21.98. We got that yesterday. However, today is earnings. So we're getting an inside day off of earnings. I'm going to want to keep an eye on this tomorrow because I do love this setup here. So you got a 1, 2, 1, 2, 3, 4, 5, right? That's your wave 3. And then you have your wave 4 pullback, your A, B, C pullback here. And this is looking like wave 1, 2, 3 of wave 5. So if we get a back test and hold of 21.98, that could potentially send us up to this wave 5 target between 26 and 28. Next up is CALM. This is CALM. Haven't done any wave work on this, but if I'm looking at this just really quickly, to me, this looks like 1, 2, 3. Here's your wave 4, and looking like this could be your wave 5. And I think your wave 5 targets could be, I'm going to do this real quick, but maybe upwards of $70. So watch for this back test of that 50 simple moving average right at that year-to-date anchored VWAP. If we continue to hold this level, I would take this trade through 53.66. That's going to be your 618 retracement. Put your stop loss somewhere under either the 50% retrace or maybe slightly under 50. And your upside targets will definitely be back to these highs here at 59.96, and then breakthrough of that, you could see a move off up to 69.89. The other thing I'm seeing here, this potentially could be an inverse head and shoulders, right? We need a little more time for this to play out, but there's your left shoulder, there's your head. Maybe this is your right shoulder here. So, just something I'm just observing on this chart right now that I didn't necessarily see before. So let's see if this right shoulder forms. And if it does, then buying the breakout of that neckline, I can even see it with my eye. The measured move would be right to $70. So we also have a squeeze setting up. So this might continue to chop around a little bit in that right shoulder, but watch for that squeeze to do a slingshot effect where it goes down and then it comes right back up and then starts to shoot higher. All right, here's CELH. We talked about this back in June. We were looking for a 200 SMA breakout. That's exactly what we got on July 5th. So it took a couple of weeks after the trade alert went out, but look at the move that we've made, and we're up to $100 here. So from that entry on 6/27, if you took the breakout over the 200, we are now up. Let's get that text color black. 68% in 3 weeks and 6 days. Let's call it 4 weeks. Let's call it a month. So 68% under a month, not really that bad, right? So what I'm watching here, let's zoom out a little bit. We have a nice cup formation here. The question is, do we get rejections off of this 110 level and make a handle, maybe, down to $82 and then come back through and then eventually give us that true move that I think we'll eventually get up to 154. Now, they had announced, I think, a deal with Pepsi. I don't know the specifics to the deal, but that is what caused this gap up. And so you could also see, if I break out Mr. Elliott wave, here's your wave 1, here's your wave 2. This is looking like a wave 3, right? You get that gap up in wave 3. However, we have not broken our contained parallel lines yet. So that tells me if we do break that, this wave 3 is going to be much, much higher. And if I run a quick symmetry move off of that, let's see what that's going to look like. So that's your 100% symmetry. Yeah, I mean, 157 could be wave 3. So I think this is something we'll have to keep an eye on. But this is looking really, really good. I would say if we break through 110, this thing could really start to rocket higher. Next up is CFLT. This is Confluent. I haven't looked at this one in a while, but as I was doing some scanning before office hours, I noticed that this point here was an area of support that we gapped under, and we back tested and closed that gap, and now we're forming a little bit of some form of handle. And so, we might have, a cup and handle setup right here. So the setup looks really good. The problem is earnings, I think, were today. It looks like we're getting a pop here on earnings. So we're getting a pop here on earnings. So what I would watch for tomorrow, I'm going to drop an anchored VWAP, as I mentioned, on that gap up candle. And we'll watch this. Let's watch this going into the rest of this week. It's also got a squeeze set up on this gap up. The squeeze might actually fire to the upside. So I'm going to be watching a move back to the 200 simple moving average. And let's see, from a fib retracement standpoint, we nailed that 236 on the gap up. So this is looking pretty good. The ending moves over 31.78, and then we'll start to see 41, potentially 48.50 to the upside. All right, here's CLR. I know I didn't put this out as a trade idea, but I know I put it out as a chart of interest. We still have this main monster squeeze that's setting up, but we're seeing resistance off of this $69 level. So what I would watch for is a break. Actually, I would probably rather wait for 70, because right over 69, you have that 618 retrace at 69.85. So I would say $70, you could see a move up to 75, and then through 75, potential move up to 79 and then 84. Here's CLH. Trade idea went out on 8/1 over the 200. We never got that true breakout because earnings was today. We did get a nice pop on earnings, right? And this is, let's see, that's looking like potential wave 3 activity, right? Because there's your wave 1, 2 channel. Here's your wave 3. So yeah, I mean, I would watch this going into 115. Let's see if it gets rejected, starts to pull back. Maybe we can get a pullback entry, back off that 200, back testing the 200, and then getting a gap close. And if we get that, then I would feel more comfortable taking that there than potentially chasing it over the gap. Here's Costco. So we've been talking about Costco. Well, we were talking about Costco earlier in the year. And I was watching it over I think it was 550 right over here, and had a nice trade up to, what is it, 6.25. And then we just been fading back since then. So this one actually looks still pretty strong, right? We came back through the 50, back through the 200. We back tested the 200 simple moving average. We're bouncing off of it now. You're getting that 50 simple moving average curling up. I would wait for maybe a back test of the 618 at 533. And if we hold there, I think that's a pretty good entry, taking it up to 568 and potentially up to 612. And earnings are until September, so we've got plenty of time on that. Next up is Crispr. This one has struggled with our trigger at 84.18. I do not mind that, because that tells me that that level is really good, and I like that. So fine, if you don't want to break out, it just gives me that extra confluence and confirmation that when we do get back there, that breakout should be pretty good. Just keep in mind we have earnings on August 16th. Here's Datadog. I've been talking about this one a lot. This one is one of my long-term conviction plays. I was mentioning watch 109.88. We got a $4 breakout or a $3 breakout, basically over that 110 level. This one looks like it has some legs here. The dog can run. Yes, I said that. Let me redraw that. So that is right. And we're getting that breakout candle today. So what I'm watching, 115, 118 next, potentially back up to 121 at the year-to-date anchored VWAP. And then 136 would be my upside target right at that 200 simple moving average. Here's DH. This one, put the trade alert out on yesterday. Watch for the break or the hold over the 200 SMA, breakthrough of 26.58. We got that breakout yesterday. We got a continuation today. We do have earnings tomorrow. So if you did take this trade, just make sure you're locking in profit or moving your stops up and watch earnings. You don't want to get caught with your pants down here, but it looks pretty good. Inverse head and shoulders breakout, slingshot TTM squeeze setup. We broke out. Here's your levels you're going to be watching into the coming weeks. Here's ENPH. Absolutely nailed this trade. It took a while, right? 179, because we put that alert out back in May 27th. Nice cup, beautiful handle set up here. You could also look at it as an ascending triangle, and earnings really sent this. We really struggled at 218, and earnings sent us up 235, continuation, and now we're starting to consolidate here. So the one thing I will say, we put in an inside day after an outside day. These tend to be reversal candles. So I just want to see, with the squeeze firing as much as it did, as big of a move as ENPH made, it might be time to reverse and maybe back test 219, because we never did get that back test. And if I turn after hours off, there's two gaps right there. So got to be very careful that you, again, we took this at 179, right? So at 179, bear with me one second. You're up 67%, in roughly a month or two, depending on when you took the trade, right? So you have to either be locking in profit, or like what I do, I like to use an ATR trailing stop. You could probably do 2.5 on ENPH, and it's telling me keep my stop loss at 249. So that will allow us to stay in the trade, and it'll allow the play to back test. If we get close or daily close under that ATR, then I would stop out of the trade and I would take my profit and say, thank you very much, Mr. ENPH. Have a nice day. I'll see you another day, right? Because you don't want to be holding and lose all your profits. The name of the game is trading and trying to hold on to a trade as long as the chart is telling you it's okay to hold. All right, next one is EVH. So this one put out a trade alert on 7/7 for a triangle breakout over 34.17. We didn't get that breakout before earnings. We actually got it on earnings. We got that nice gap up, but then it gave away a lot of the profits, or a lot of the gains. So for this one, I'm going to watch for a back test on that breakout level, a back test on 34.17. If we get that back test and bounce, this might be a good trade to take. And you could also see we got rejected very close to the top of this channel. So potential 1-2 setup here. I want to see wave 3 activity with a gap, which we saw, but a move over this channel. Here's Funko, put out a trade alert over 27.54, 3 wicks into it. We have earnings tomorrow. I'm going to put this trade idea on pause until after earnings. If we get that gap up, you know what to do. Slap an anchored VWAP on that, treat it like a peg play. Here's NFE, put out a trade alert back in May over 44.57. We got a false breakout here and it came right back down. But if you took it back through the trigger, we're coming into earnings on August 4th. So that's tomorrow. Hold off on any new trades on this, but this was a good trade to be had. It just didn't have the momentum that we needed. Here's ON. This is ON Semiconductor. When I saw that semiconductors were really strong, I really started to dive deeper into the semiconductor space to see, outside of the NVIDIAs and AMDs of the world, what other semiconductor chart setups look pretty good. And I came across ON. You could see we broke out today after earnings. So no worry about earnings here. I think, there's a good entry here tomorrow if we hold over 68.52. Otherwise, wait for it to test 71.46. There could be another entry over that level or on a breakout back test and bounce off of that level. Here's OXY Energy. Looks like it might be done for now. Not seeing too many energy names that are, there's setups out there, but there's no continuations. They move higher like 2 days and they come down 3 days. So I would just keep an eye on Oxy. Watch still that trigger 63.08. Next up is PLAB. Talked about this, didn't put an official trade idea, but look at the breakout over 2304 here on the 28th of July, and just a beautiful continuation higher. Struggling a little bit in this 2463 zone, right? But we do have earnings coming up on August 24th. Yeah, it looks like August 24th. So there is still time for this to run up until that earnings. Here's SHOP. Haven't talked about SHOP in a while, but SHOP is starting to finally break over this base that it's been in. It's been in this wicked $30 to $40, $30 to $41 base that it's been building out. And now we're starting to break above it. So if you like SHOP, and I do, this is probably a good spot to start accumulating stock for the longer term, but keeping a tight stop on it in case we get that reversal back into the zone. If we go back into this range, anything under 40, I would say get out of the trade and we'll wait for that true breakout. But now at $42, this is looking pretty good. Here's SOFI. I haven't talked about this name in a really long time, but they did report earnings today. Beautiful gap up this morning. And I want to see, can we make it all the way up to $10? I know some people are accumulating SOFI down here. I think that's fine, as long as you have a proper stop loss in place. But this is looking pretty good post earnings. Let's see tomorrow, can we hold $8? If we could hold over $8, then I think we can see maybe $10 in the next couple of weeks. Just a couple of more left. Square, another name that we haven't talked about a lot. This one starting to break, we're starting to come up to prior range. We do have earnings tomorrow, so keeping a close eye on that. Does look like an ABC retracement. You can see that here. Bear with me 1 second. Let's get that, take that off. There's your ABC. So I want to see, can we get, you know, some wave 3 activity, because this definitely looks like a wave 1 too, but I really can't confirm that until we see, you know, our potential wave, 3. And so again, what we'll do is we'll look at parallel lines here. You can see we are breaking above it on today's candle. So it's looking good, right? But I always like to say guilty until proven innocent, right? Because stocks are, they could be tricky. So let's just keep a close eye on Square, but it does look pretty good before earnings. And last, but certainly not least, because this is all in alphabetical order, is TMUS, T-M-U-S. This is T-Mobile. And you can see we are through. This one also took a while to get going, but earnings really sent us over this 135 level. Let me get those fibs back on. And this was from a prior high back here. Let me fix that. There we go. And so what I would expect for T-Mobile over the next few weeks is to melt up to 150. If we hold 139.21, that's what we should do. Otherwise, we might come back and back test 139.21, and then I would watch for a move back up to 150 from there. So that is what I got for my chart review. I know it was a lot today. We've got about 15 minutes left on this particular Zoom session. So what I'll do now is I'll take any questions or chart requests. And let me go into that first chart request here. So it's DCGO. Have not charted this one before. So let's start with where our trend line is right here. So it looks like we're getting potentially a trend line breakout there. Could even see this maybe as, potential head and shoulders set up here. Right, here's your neckline. So yeah, I mean, this looks pretty decent. Let's look at what our targets would be. These would be your fib targets. 50% is at 840. You could see that acted as resistance back here. So this is looking good. Look at the resistance here on the year-to-date anchored VWAP and that 382 Fibonacci retracement. Keep in mind, we do have earnings on August 8th. So I guess that's next week. But any moves up to the 618 at 922, if I extend this back, look at how the 618 acted as resistance, right? It's pretty strong resistance. So watch any moves into 922, but over 922, this can come up to back to these highs here at 1186. So Lloyd's asking, if you were to buy 2 stocks right now, what would they be to hold into the next 4 days? It's too arbitrary of a question. When you're working in that short of a time frame, you need to go down. You need to go down to lower time frames. Maybe I would go down to like a 30-minute and look for chart setups on the 30-minute. You know, how I trade is more swing trade / day trade. That's kind of a short swing, and it's not something I could answer right away because I would need time to look for the right type of setups. Well, basically what you'd want to look for is anything, you know, that has good chart setup on a 30-minute that's breaking out. All right. By the way, I mean, the trade ideas that I put out every day to the members, they get emailed at around 8:15 Eastern Standard Time every morning. Those are not necessarily names I would say you could take them for 4 days, right? But 14 days, yeah. I think anytime they trigger, you're usually going to get some nice momentum after that trigger. So those would be names that I would look at. And some of the names that you saw, the trade ideas that I went over in this video, so if they haven't triggered already, I would look at those names. All right, let's take a look at VUSI. It's one I haven't looked at in a while. So that's nice, broke right through that 200 simple moving average. I'm actually going to go up to a weekly chart. Looks like earnings are going to be next week. Sorry, I'm just observing this chart real quick. So this is pretty good. So you have a break over the 50 simple moving average on the weekly with a beautiful weekly squeeze setting up. And then you also have a break over the 200 on the daily with a squeeze firing today. So this is a pretty good setup. I like it. Let's look at some potential fib targets to the upside. So $10, that makes a lot of sense. That would be your next stop over 857. And then 1148 is going to be your 618 retracement. That would be the next level I would watch. But this is looking decent. You're getting some nice, a nice channel developing here. So yeah, it looks pretty good. You're seeing a little resistance off that center channel, which I think, you know, that's fine. But once you start breaking through that center channel, it'll start to make its way up to the top of the channel. All right, let's take a look at Veru. Yeah, I think I was looking at this back in April, May. And let's just take a look at where we are right now. So this one probably tough, right? Because it's more of a meme type name in terms of how it trades. It's really just like, for now, it's just like stuck in the zone, right? I think any moves below 1074 is probably a pretty good short to the 200, but this is really hard to buy to the upside. Your time frame needs to be short. So I would watch a break over the 50 simple moving average. You might be able to trade it back to 1750, but I would only see that as the trade. I wouldn't necessarily look for this to break out. You know, you have to have clearly defined trade plans for stocks like this. All right, let's take a look at WBD. This is Warner Brothers. I think it still has a lot of work to do. It's a big move down. Wow. All right, first thing I would do is look at a long-term trend line. You know, we're still well below that. I think your best bet is, you know, maybe you see a move back up to the 200 if we hold the 50. You know, you could look at some of these as targets to the upside. I think we'll probably hit the trend line first. That's going to be your biggest point of resistance. Then you have the year-to-date anchored VWAP, which is that yellow line, which is in confluence with the 50% Fibonacci retracement, which is also in confluence with $20, nice round number. And then your best bet, by the time you get to the 200, it's likely going to be on top of that 618. Any trades that I would say you take probably terminate there. I don't know on a longer term basis. These media companies are really tough, really, really tough to own. But yeah, it's possibly tradable. HD, I like that. I've been watching it for a while. 308 has really been a level that I've been watching. Falling wedge breakout here. It back tested 50 simple moving average. Yeah, I mean, it looks okay. I think over 308.41 might be able to take this up to 317, and then from 317 back up to that 200 simple moving average. CF. This is CF Industries. I originally had a trade idea, went out in May on, let's see. It hit that 4236 retracement or extension and then just got rejected. Looks like an ABC retracement. Let's see, wave 1, 2. This could be, yeah, looks interesting. Definitely interesting for sure. Yeah, I would say I like this over $100, honestly. I'll scratch that because it broke out and then failed. But yeah, I like this through 100. You could see coming into 100 here, it acted as resistance, and then we broke out. Then we had some wacky price action around 100. Look at all the resistance here. Here, I'll zoom in a little bit so you can see it. All that resistance here, a lot of chop around 100. So I think over 100, I think you have to be careful because it's just been really choppy over that level. But over 100, 105, 112 would be my targets to the upside. Let's take a look at DKNG. It's funny, I almost put that on the list today to look at, but it's DKNG, right? Because a lot of these growth names are starting to move. Let me just clean this up a little bit. All right. Yeah, I think it was pretty nice trade over 1489. You're coming into that year-to-date anchor VWAP here at 1684. I think any moves through 1684, you could see the 200. But man, this is really, it's just a tough name to own. And honestly, a tough name to trade. Yeah, I don't know. I'm not sure what your plan is with it, but it wouldn't be on the top of my watch list, personally. I think a lot of the names that I went over today in this video are names that I would feel comfortable buying, breakouts on, and I would say potentially owning for a longer period of time. DKNG, I was drinking the Kool-Aid for a little while, but I think it's just it's a tough sector to own right now, given the state of the economy. With rising interest rates, it's just a tough environment for names like that. So, all right, we're coming up on the top of the hour. I do appreciate everybody that turned out. I know a couple of changes. We're still keeping it Wednesdays, but I'm going to be moving it down to 4:30. So this is going to be the new time. 7 o'clock, in the summer is just a little too late. And plus I've changing my schedule around a little bit. So 4:30 works a little better for me. And I've also had a couple of people mention that the earlier, like after market close, is pretty good too. So hopefully, you'll catch it the next time. But if not, I'm always recording these, and honestly, doing them at an earlier hour, it allows me to edit down the video and get it out to you quicker in case you did miss it. So do appreciate absolutely every single one of each and every one of you. Thank you so much for your support over the years. And as always, I am here to answer any questions or have any comments. Happy to answer them on Twitter. Feel free to just DM me. If you've never DM'd me before, just let me know who you are and where you met me, and then that way we could start our conversation. So Appreciate you all. We're in melt up mode here in the market, right? So just be careful because the slightest news event can send us right back down. But let's enjoy this melt up as we get it. A lot of stocks setting up with some nice trades. And I will continue to put out those trade alerts every single morning and giving you multiple ideas of ways that we can extract money from this market. So appreciate you all. Take care, everyone. Catch you in the markets tomorrow.